Alrighty, folks. Once again, we are going live in school. We are doing something very unique. We are allowing school members to ask questions. Today, we are asking questions of what we call the three amigos, Mr. Dion from Dion Talk, Matt the Lumberjack Landlord, and myself. If you would like to ask questions, you can do it one of two ways. You can raise your hand or you can put it in the comments. We are here for you. But before we get to the questions, which I hope there will be many, I do have a couple of topics that I want to spring on you, but first let's welcome them into the show. Matt, you're on screen. How are you?
I'm doing super. How are you?
I'm doing very, very well. I don't know if you heard it on the daily financial news this morning, but my top 15 channels that my audience watches in the last 28 days, not a single doomer or crash bro. I am
Oh,
so
wow.
excited.
That's crazy.
All victories. Oh, so I was when I saw that last night, when I look at my analytics, which I do weekly, I was over the moon. I got out of the couch and jumped up and down. And Olivia's like, "What the hell is going on with you? You're weird." But she knows that already.
Established. Yeah.
Established. It's 30 plus years. Yeah, I'm weird. Anyways, let's go to our other boy, Mr. Dion. How you doing, buddy?
I am almost marvelous. It was really cool to hear that list this morning and not see the doomers on there. For a long time in the beginning, we would get people say, I want to hear both sides. Finally, people are realizing that the side every 2 days has a new made up reason with a new fake chart of why the crash is coming that hasn't come for years now. Maybe they're finally stopped, being on their radar.
Yeah, and then the last thing that was really interesting is 4 or 5 of these channels are weekly guests on the channel. Others 4 or 5 have been on the channel multiple times. So I am just so excited that the community is dumping, blocking doom and fear. It's never easy, but it is possible, and that's what we are here, and that's what we talk about all the time. So the audience, thank you, thank you, thank you. You're amazing. All right, my first topic that I want to talk about, because I think it's going to have ramifications, but I don't know how much. In the last 48 hours, Amazon has issued a press release demanding back to office 5 days a week. So now when I think about this, everybody's got to go back to the office. Is this, well, you know what? Instead of giving you my opinion, I'll hold it for the last. So I don't know if you saw this, Matt, that Amazon now is requiring people to come back 5 days a week. What's your initial reaction? What's the ramifications? What do you think? Is this a sign that others will do it? What do you think?
Yes, others will do it because this is a copycat, market. So yes, others will do it. And you couldn't do that when you were staring down the barrel of 3.2% unemployment. And now that you're mid fours, and I don't believe for 1 second that we dropped to 4.2, give me a break. I'm not an idiot. So that's a bunch of bullshit number. That's a pre-election number. And that number is going to soar past 5 in the next 90 days, I believe. Or in the next 120 days. So basically into the new year, that thing's going to soar. And we're probably getting to 5. And so when you and I talked about this a year ago, I said, hey, it could go bad fast and we could get to 7.5, or it could just be double what we saw, which is 5 to 6 in the next year or so. It looks like we're trending that way, but Amazon, you can make these types of requests of your employees when the job market is now soft, when 80% of the jobs out there on LinkedIn and all these other, and Indeed and all these other places, when 80% of the jobs are complete and total fakes. That's what's pumping up the numbers. And that's where all of these analysts, and Mike, you're one of the best at analyzing data I've ever seen, but garbage in, garbage out. And this is garbage in. This is just like a lot of the bullshit that they're talking about with how they, account for metrics. And they're like, well, X food, X gas, X rent. Yeah. What else do I buy, you idiots? What else do I buy? And so, yeah, it's something that is going to pick up pace. The question is, where is that going to, it's going to happen in their initial places. All of these companies have been really smart. Elon Musk led the way where he's basically like, hey, I'm not paying 45 million bucks a month or a year for that lease. So get your pencils out, kids. I'll pay, but it's not going to be that number. Well, that time is going to turn but you're still too early to invest in office right now. Right. Still too early. There's still bloodletting to be had there, but yes, the long answer to your question is yes, it will happen. More will happen. More, it will happen with more. And that is going to, some people moved, and that's going to mean a job change for them. And that's going to be a problem.
So Dion, one of the things that you have highlighted, and first off, let me just say, I think you're about to disagree with Matt, which is awesome. You actually adopted a investing strategy that looked at the exurbs, right? You went out an extra 30 minutes. You bought a duplex near the water that was, 20 or 30 minutes past where you normally did, because people could commute to the office 1 or 2 days a week. So Amazon announces 5 days a week mandatory, get your butt back to the office. Does that scare you at all? I mean, Amazon's up in your neck of the woods. Do you see that as a one-off? Is this a game they're playing? Does this change your thesis? What's this mean to Dion's strategy of buying 30 minutes away?
So there's three elements here. I don't know that any of them actually disagree with Matt, which is I'm trying to find a way to make sure I do, because that's my goal every video. Well, the first one is Amazon has 1.5 million employees. Most of them were warehouse workers, like the vast majority. And the way I'll prove this is the Navy ship that goes right by my house here. I have the Nimitz and the Reagan that goes by. I watched this massive military warship go by where over 90% of the people on that ship are under 25.
Oh, wow.
So they're all young, right? So warehouses are mostly warehouse workers. Mm-hmm. Amazon has a very different approach to employees than every company out there that I've ever seen. So I ran a CDL school and we did training for this thing for Amazon called the TOMS program. And I've been in several warehouses for Amazon where they give this speech. And here's the speech they give to their employees. So you have a manager out there going to the working class. The longer you work here, the worse you get. If you've worked at Amazon for longer than a year, Amazon will pay up to $5,000 for you to learn a skill and go work somewhere else. All you have to do is sign this thing saying you promise you will never work for Amazon again. And they quote these statistics of how many injuries happen after so many years working there. So Amazon's goal is employee turnover. It's a very different metric than I've seen in any other company. The goal is retention means, more money. And it's not that way at Amazon. They're trying to cause churn. So this come back to the office is an attempt to probably get rid of more employees. I've heard the speech myself a dozen times. I can almost give the whole thing. And so it's their goal to have that turnover. The second thing is Amazon isn't saying you have to go to your office in Seattle. Like there's Amazon centers all over, because Amazon saw how, just like I did, how remote work was pushing people, giving people the option to go out of the cities to the more remote areas. So there is, at the edge of Bremerton, and it's not even Bremerton, it's a tiny little town, there's an Amazon hub. So people forced to go to the office can work in the Amazon hubs in more remote areas, because that's where the more people are moving there, so more deliveries are being made outside of the major cities. So that's the first thing, is they're trying to have turnover. The second thing is there's hubs all over. So if you have to go to the office, that doesn't mean they're going back to the city. And then the third thing with the Amazon thing is, don't let and you quote this way better than I do, the law of small numbers when it's percentage changes. Yeah. Right. How much of the workforce does Amazon represent? And when you hear people who get publicity like Facebook, X, Amazon, Tesla, whatever, saying come back to the office, it seems like that's a massive push, but it's such a small sector of employment that it's actually not big numbers. Go through just mentally in your own head, how many people do you know that work remotely? When I started talking about it 2 years ago, it was about 50% of the people that I know. Take out truck drivers, right? I have to kind of be transparent there. Not too many remote working truck drivers, but if you take that out now I want to say it's like 7 or 8 out of 10 of the people that I know personally work remotely.
Yeah.
I don't know people who work at Amazon though.
Yeah. So Amazon has, as of 2021, which we know this number's grown since then, they have 1.6 million employees. 700,000 of those employees are in warehouses. So 900,000 of their employees aren't in warehouses. And so the big thing that Amazon's changed as a company, because now they're mostly, while they do the package thing, they're about AWS. They're about,
cloud. Yeah.
They're about cloud. They have the biggest cloud out there. They're going to continue to grow that. And that continues to grow 10, 20, 30, 40%, year over year. So I think that requires, so Mike, you're my background in tech. I think that's and development teams. I don't care who you sell it to. No one believes that a dev team works well remote. They want people in the room throwing sticky pads at each other and yelling about, what that code needs to do. I've been there for 20 years. So that's where I think it's not going to be overnight, but it will gradually change. And I think that Dion's right. I think they're doing the right thing now by having some of these hubs, but then that's what's going to shut down in the next 2 or 3 years. They're not opening 10-year leases. They're not buying the property. They're entering into a lease for whatever, a 3-year period. We'll see where that is in 3 years, but that's the shift I think it's going to happen, because it's going to become an employer's market, not a worker's market.
Yeah. So when I kind of closing out this first topic, kind of giving my thoughts, the first answer is, and actually neither Dion or Matt brought this up, I think this is just a way for Amazon to force resignations. I think Amazon is trying to get smaller. I think Amazon is like, hey, you don't want to come back? Gone, right? It's a way to have a riff or a layoff without having a riff or a layoff, because that could be impact on the stock and all of that. So I absolutely expect many Amazon employees to say, see ya. And frankly, Amazon will be entirely okay with that. So there's that. Second, I do believe, and I believe this for quite a while, that the old office model is dead and gone. So I think Matt was absolutely right. Amazon declaring back to the office 5 days a week is not some bottom signal for the office. Even, I don't know this for sure. No, probably nobody does. But Amazon Office, December 2019, that will be peak office occupancy, right? So, even in Seattle or wherever their headquarters are, Amazon's corporate offices will be smaller. And again, there's going to be a lot of excess footprint. So Matt's absolutely right. This is not a sign that office is at the bottom. It's a sign that we're getting closer. We're probably more than halfway, but I don't think it's declaring the bottom. And then lastly, on Dion's point, I do think that Amazon, frankly, tech is such a small part of the total U.S. economy. Agreed. That even if big tech did get back on this horse of bringing back development and sales and marketing and all of that, it won't be large enough to be a reversal. I think work from home is here to stay. I think we kind of crossed that chasm. We're seeing a lot more infrastructure and technology to support that. So yeah, I don't think this is a sign that everybody's going to go back to 2019 in downtown cities like San Francisco will be suddenly flush with employees. But I did think it was interesting.
Can I just add one thing to that? So I think that's exactly right, Mike, with San Francisco. All due respect to people that live in San Francisco, it's now a human toilet. And at the end,
there will be a bottom eventually. There will be a bottom.
It's a long way from a $2.5 million condo in San Francisco, right? It's going to be a long way down. But the issue is I think what this actually forces, that next step, is I think it forces those organizations to look at their employees and say, we have much greater attention when we move to a place like Texas, where everyone bitches and complains about Austin being a $450,000 single family home. Try and buy a single family home in Mountain View, California. Yeah. Good luck. And when you make $300,000 or $400,000, this is going to be their opportunity to show their employees, hey, listen, yes, you can move with your family, but this is going to be the part to a massive migration out of these crazy centers in California. LA, they've already taken a bunch of that movie making in other places of the country. That's already happened. And now it's going to happen even more with tech. It started, but this is a 10-year process. And 10 years from now, California is going to go, where the hell did all the Silicon Valley startups go? Where'd they go?
Yeah, I totally agree with that. I see it every day. In fact, did videos on it about San Francisco adopting tax structures that were stupid and idiotic that would drive tech out. Guess what? It's not there anymore. Pretty wild. But all right, let's go on to topic number 2. This was brought to us by the one and only Dion from Dion Talk. Dion did a video apparently yesterday talking about why housing prices are going to go up as rates fall, and it won't be because of the move-up buyer. I don't know about you folks, but I want to tune into this conversation because usually he breaks my brain and I have to figure out what he's talking about. So Dion, the floor is yours.
So most times when people say the rates come down, that there's no inventory and there will be more inventory because the move-up buyer will say, okay, rates are down. I can finally go to a bigger house and my cost doesn't just go up, right? As much. They can sell, redeploy the funds. And I think right now that the biggest trapped inventory is people who would sell for the right amount of money. And
yeah, I
so,
call that wish pricing, but yeah, okay. So far I'm with
so
you.
if rates come down, the people who buy based on payment that aren't caring about price, they're not looking at yield, the home buyer that's looking at payment
Yep.
will realize rates are lower, I can pay more. So then people will start to see home prices go up, not people who are selling a house to move, but people who have the inherited house, the place that they kept and turned into a rental because it didn't make sense to sell. But prices will go up and they'll go, okay, rates came down. I can increase my price and sell. So at the current $500,000, it's not worth selling. But if it goes up to 6 or 580, I'm absolutely going to offload this. So it's not even the people who want to sell so they can move. It's just the people who have trapped inventory because rates went up so fast, they couldn't get the prices that they wanted. So a lot of people are expecting prices to come down because rates come down. It's absolutely backwards thinking. And I hear the doomers say it all the time, because first it was, if rates go up, prices are going to crash. Now it's, if rates come down, prices are going to crash, because all these move up buyers are going to flood the market with all of these houses that they're waiting to sell. No, it's just going to be the people who think that's enough money for me to sell. And so and it'll only happen if prices go up. So if prices stay the same or go down, we won't see the inventory.
Right. They'll just continue to hold.
And so as prices go up, then we'll see more people release. So that'll actually prove statistically prices are going up because that's who's selling.
Yeah, this is a really interesting conversation, because if we were to bring it back to economics, we are essentially talking about two marginals here. What do I mean by that? We have something called marginal supply and marginal demand. And this is you can think of both of these as being, it's like water rolling down a river, and there's a small barrier, maybe a beaver dam or whatever. There's some kind of obstruction. Enough force gets behind that thing, and eventually it will blow through or get around or go over that obstruction. The question I have, and it's frankly the most important question for the housing market, is what breaks first? Marginal demand or marginal supply? Because here's the deal. If, I don't believe this, but if marginal supply breaks first, we could see a wave of inventory. We could see that inventory dwarf demand. And if it's the right type of inventory, we could see prices fall. But does anybody in their right mind, ex crash bros and doomers, really believe that a wave of marginal supply will be unlocked before marginal demand? Because let's be clear, that's the game we're playing. We are in a buyer's market. I believe marginal demand is stacking up by the day. Folks, mortgage applications, refis are up something like 124% year on year. Mortgage purchase apps were up 5% week on week. Interest rates are down to 6.12. The Fed's meeting today, clearly a rate cutting cycle. So the game we're playing is who breaks first, marginal demand or marginal supply. Matt, the floor is yours.
Demand's going to be the problem. Demand is going to be the problem. Demand's going to be the problem. It's going to be the problem.
Come first.
It's absolutely going to come first. Demand is going to be the problem, and it's going to be because of jobs. It's going to be because of security of jobs. You look at any poll out there, not political. Don't look at those. Those are a waste of time. But look at any poll out there where people talk about, are they concerned about the economy? 80% say yes. And that fear, Mike, because you've studied the consumer for over 20 years, almost 30 years, that fear that those people have is what makes them the 69% that live paycheck to paycheck, that don't have what it takes, like the people on this call today, that actually invest in themselves, better themselves, get information from people that are doing that same job. Demand is going to fall. It's going to create what I believe up to a 10% correction in median house pricing, but it's going to correct the pricing piece. It's not going to be a crash by any means, but I am seeing it right now. Our supply in the last 120 days on the market has almost doubled in 120 days. And we're seeing now this month in just September, 60% of the items listed, 60% of single family homes listed, because I'm selling 2 single family homes, 60% have taken a price reduction. 60. So I'm seeing this firsthand. And the worst part is the people that are interested in my property are covered in ick. Dion's term. They're covered in ick. They are covered in, we'll do this deal if, and the list, oh my word. I got an offer this morning. It had 7 things on it. 7.
Yeah, tell the audience give them an example of a thing.
A thing. So a thing is, we'll do an inspection. So we are going to do inspections. Number one, that's a big thing. Didn't happen for years. Yep. Now they're doing inspections. Now they're saying anything over $1,000, we're going to ask for a credit for.
Okay. Yep.
That's the thing.
Buyer's market, baby.
First sign of a buyer's market, right? First sign of a buyer's market is inspections. Second sign is they're already building in. Hey, if it's more than $1,000, we're not even negotiating. You're going to have to do it.
Yep.
And so I'll sign that because I can always walk away from the deal.
Sure.
Right. But I said to my agent this morning, I said, here's the deal. If I had 4 other offers to choose from, we'd be talking to them, but we don't. We have 1. So because we have 1, we're going to dance with them. And that's what we're going to do. But the other stuff that they put in there too was obviously the appraisal piece. Mike, in the last 4 years, was the appraisal piece in any contract?
No, it was waived.
It was waived. And people were just like, hey, if it doesn't appraise, cool, whatever, we'll still buy it.
Yep.
That's now also gone.
Buyer's market.
These are all buyer's market signs. He wants to add something to the unit. He's not leaving it to guessing. He wants that in the contract. I told him, I said, we're not holding the property for you for 45 days to get it approved from the city. We will allow a zoning attorney that I know to weigh in on it and give you a fact or give you a feeling or give you an
opinion,
if you will. Yeah, exactly. Opinion, a professional opinion, but we're not holding up the property for that. So all of the things based on actual experience in the market, having houses listed today, this is what I'm seeing.
Well, folks, first off, nailed it. Buyer's market. These don't last long, folks. These don't last long. You're going to have, in my guess, for most of the country, January 15th, maybe February 15th. Siberia, which I call the Northeast, might be March 15th, right? Whenever the snow finally melts.
April 15th.
But this is your April. Oh my God, April 15th. How do you live there? Get a second home already, you cheapskate. But I hope you're hearing this. We are buyers. We are investors. We want great deals. All I heard when Matt was running through this is disrespectful offer.
Yeah.
Disrespectful offer. We don't need every deal. We need one deal. So no days on market, no price points. And trust me, there are people that need to sell. And when you get them in those situations, it'll be amazing how flexible they are in closing these. So please appreciate this unique opportunity. I've been doing this almost 30 years, 25 years, and buyers markets are very small. The windows are 6 to 9 months, and we're in one right now. So
Mike, can I tell you how right you were about the disrespectful offer?
Yeah, please.
450. What were those listed for?
Okay.
Yep. 300.
Oh,
300.
I love being right.
300.
I love it.
And I said to my agent, I go, yeah, which half of the house would they like?
Because you can always say no, but
yeah. So I just said, so literally I said to him, I go, do not even respond. That is a non-response offer. So then they came back at 400. I still said to him, I go, no response. None. We're not negotiating it from 400. No. They came back last night with 4.25.
Oh, okay.
But this buyer's an idiot. I hate him already with how many things he's asking for.
I love him already.
Yeah. Like, dumb son of a, yeah. You know what's going to happen? I'm going to take another offer for less than what he offered because I can.
Yeah, of course. Yeah. So let's break this down for folks. Matt obviously is in a unique position where he doesn't truly need to sell. He could flip this back to a rental and be just fine. But most people aren't Matt. They don't have the financial wherewithal. They don't have the hundreds of units behind them. There are people out there. This is their final unit. The last thing they have to sell. This is their parents' house. This is the last thing they have to do before they move out of state. And trust me, most of them, probably most people tell you to F off at 300 when list price is 450. My guess, 90% of people counter at 400, especially if it's been listed longer days on market than average. So again, this is going to be fun to watch, folks. It is so fun to be right. It's pretty awesome. So again, as of right now, folks, I don't see a single person with their hand raised. Again, you could go to the reaction button at the bottom click on that. There's a little button that raises your hand. I would love for somebody to ask Dion, Matt, or I a question. I will be going through the comments, but right now to see if there's a question. But let's actually do this first. Folks, it's Fed Day. I actually have no freaking opinion about what the Fed is going to do. I usually call something. I don't know what's going to happen today. So since Matt's on the screen, we'll go to him first. Matt, what do you think the Fed does today? 0, 25, 50, or 75?
Oh dear God, 25. If they do 50, it's political, and it shows that Wall Street still runs the country. If they do 25, it says, listen, you little whining babies, we'll give you a little bit, but here's the problem. The 25 points is already baked in.
Yeah.
You should
Rates
not
could go up. Rates could go up.
To 25 is baked in. I talked to all of my bankers this week. I talked to 7 different banks this week. It's baked in across the board. People don't understand. When we had COVID, it was 1.5. It was 150 basis points is the margin that banks were working with. Now they're working with between 250 and 300 because these smaller banks are getting crushed because everybody's taking deposits out of the small banks, putting into the big too big to fail banks. So then they believe that they're still covered. You're not still going to be covered when FDIC runs out of money. Bad news. So the fact of the matter is that it's going to be 25, and it's going to be because that's what politically is tenable from both sides. Because if the GOP wins in November and they did 50 basis points, that regime is going to go on a war path for those people. And if the other side wins and the incumbent stays, then that's going to be then that's justifiable, and it doesn't necessarily tilt the scales in their favor. So it's going to be 0.25. If it's 0.5, that's an issue.
Very, very cool. Dean, I know you don't follow the economy all that much, but I'm going to ask you anyway. Do you have a guess, an opinion, smoke signal on 25 or 50?
So what I think matters is, and I would start the question with, I'm trying not to make the assumption that most people are investors who do the work. I think most investors don't do the work. And then most people aren't investors, they're home buyers. So when we hear that the Fed did a cut, whether it's 25 or 50, I think the average person is going to think, okay, mortgage rates came down. They're not going to think it's baked in. They're not going to think it's already there. So then they're going to start to look. And all these talks about coming into a recession, right? Most people think FHA loans exist to help people get on the property ladder. And that's not why it was invented. In 1934, they came out with the FHA loan because we had 2 million construction workers laid off. And we were going into that, the depression, not just recession. And they said, we're going to back building so that all these construction workers can have a job. So to shorten this recession, we're going to see push for FHA. We've seen lending come out already where conventional loans, they said, okay, now you can do duplex, triplex, and fourplex. And we'll take away self-sufficiency. We've seen FHA limits on high cost of living areas now go above 1.1 million. So FHA limits are going up. And that's on single family. On small multifamily, it's like 1.4 now. And so people aren't smart when it comes to finances. There might be smart people, but when it comes to finances, most people don't educate themselves. So they're going to buy based on payment. I think we're going to see more demand come because the Fed cuts rates, which don't impact mortgage rates, but people aren't going to put that together. And so I personally think it's going to be 25. I think they don't want to shock the system with that 50, and because that would turn it into a political thing. I think it would give, let's just say, someone on the right side the ability to attack and say, oh, you're trying to keep the incumbents by doing this. And it's too late, too little, too late. I don't think they want to be in that conversation. So I think 25.
Yeah. I think at the end of the day, I really don't.
Jan sounded so smart there.
Yeah, he did, doesn't he? He's like this. Yeah. Anyways, I'll leave that alone. I really don't know. I mean, I've been beating myself up on this. I don't know what the call is. I keep tying myself in knots because, historically speaking, they want to get ahead of things. So that would typically the first cut is the big one, just like the raise is a big one. So that would necessitate 50. I could definitely see a lot more logic for 25. Frankly, I see logic for 0. Let's just throw that on the table. But I don't think that's coming. I think it's, it's baked in at this point. So I don't know. I think it's more important. The signal. Are they concerned or afraid? And I really do think it comes down to that. Are they concerned about the economy or are they afraid? And then probably more importantly is the dot plot. How many cuts do they see this year? And how many cuts do they see last year? Because this could get wonky, man. If they start forecasting 10 rate cuts, you want to see the currency market go bananas. You want to see rates gyrate, this is going to be wild. So we did get one comment from Carolyn. We're going to ask that first, and then we have 3 hands raised. Thank you, thank you, thank you. Carolyn, this is probably for Dion. I have a retiree applying for one of our rentals. How do you guys do income verification without a W-2 or W-4 income?
So I'll answer first, but this is really Matt's going to have the better answer. So I'll answer first and then turn it over to Matt. So how do you verify income on a retiree? I don't check. I just don't. I look at credit score and eviction history. I think if you look at income, you eliminate people who make the majority of their income through tips, like cosmetologist, waiter, bartender. They tend to be some of my better tenants. They work for me, I guess. My tenants. So I've never checked income. I don't have a multiplier. I go with a bit higher credit score. So it's not something that I've done, but Matt.
Okay. Yeah, Matt, what do you look at?
So I look at I get copies of the last 3 months of their bank statements.
Exactly.
I want to see what's getting input there. I want to see what's coming out of there. Brandon, you're nailing it right there, my man. I see you shaking your head. Yes, that's exactly right. Because here's what's going to happen. There's going to be a downturn in credit. There's going to absolutely be a downturn in credit. There's so many people out there with cars that they can't afford and lifestyles they can't afford. There's going to be a new normal. And the new normal is probably going to be 40 to 50 points less than what it is now. Means that they still pay, but they pay less. But that's the biggest hit that's going to take in this market is credit. And so when that happens, I need to make sure that I have multiple layers of which I can judge somebody. And so I know that people might have a late X payment or this or that or the other. And the other thing too that we're seeing from COVID is more divorces and ruined credit from those divorces. So I'm actually doing a little bit more work on that side of it now, where I say I want your last 3 months of your stubs from your bank.
Yeah, bank statements.
When you have pay stubs, great. In this case, Carolyn, where you asked about retirees, obviously they don't have stubs, but what they do have is they will have the direct deposit that goes into their bank.
Yep.
And that's what you're looking for.
Yeah, bank statements. Carolyn, I'm going to go ahead and unmute you again. Go ahead. If you have other follow-up questions or whatnot, let's go, Carolyn. Oh, asked of you. Carolyn, are you there?
Yeah, can you hear me now?
Yeah, there she is.
Okay,
how you doing,
sorry
Carolyn?
about that. Yeah, I'm just looking at, if more retirees are trying to rent places and they don't have the W-2 incomes, and there's a lot of them out there, they're probably going to be looking for rents. And all they can do is say, this is my Wells Fargo statement. We have a guy coming today. He's got his Wells Fargo statement. He's like, oh, can I tell my current landlord I can give my 30-day notice? I'm like, no, we want to see that you have not just your SSDI, but you have in your Wells Fargo, like 300 grand.
Yeah.
Yeah.
So and Carolyn, I would just to kind of re-hit something Matt did. I would ask for multiple months.
Yeah. 3 months.
You want to, 3 months minimum.
3. The other thing that you're doing too is this is also on the Dion side where Dion and I talk about eviction stuff all the time. We don't want somebody that knows the process. So we want you to say yes that you were never evicted before. And then from our perspective, you can go through the degree of the Zillow or whatever verification of that. In our state in New Hampshire, it's fairly easy to look that stuff up. And I can see if they ever had court cases and I can see what they were. I actually had a student of mine do that, and he did it, and he found out that that person that he was going to let in had just stabbed somebody, and that literally like in the last 30 days had stabbed somebody, and that they were actually moving because they were getting tossed. And so this is the way to do it. Find the access to court records. And if you don't have that, then find somebody that has access to the things that you need, because it is a nightmare to fill a place fast when it's not fully vetted. So you're exactly right. You're doing the right thing.
My software is already, they did an eviction background and a crime background, and it was negative so far. So that's, but it's just the income thing. Thanks, guys. I don't want to take up anybody else's time. Thank you. I appreciate it.
All right, Carolyn, have a wonderful day. Thank you for being here. All right, Frank, you had your hand up next. Let's go, Frank, old guy REI.
Hey, good morning, everyone.
Hey, Frank.
I've been trying to get a better understanding about recasting a mortgage. And if it's okay, I'll tell you what I do know, and then you can just pick it to pieces.
Done.
So I did check in with our mortgage company, and to start the process, they said I would need to put in a $10,000 lump sum. And if I understand it correctly, I thought originally that they recast it for another 30 years, but it's apparently that's not the case. So ours is got 10 years left. But if they only do the recast for that amount of time, I don't see how that can lower our payments.
So I'll take that because I'm recasting 9 mortgages right now. 9. In fact, do not leak this, but tomorrow's live stream is about how I got 3 free houses. I will show you how I did it. Now, the issue is that it's very bank dependent right now. Very bank dependent. I talked with my bank originally. They said, we want to raise your rate from 4 to 5%. I said, take a flying leap. I said, that's a 25% increase. They're like, no, it's 1%. I was like, you're a banker. You should know math better. It's going from 4 to 5. That's 25% higher payment. So I tell you all that to say, obviously, you're going to be there tomorrow and I'll show you exactly how I did it. But it's really bank dependent. The recast, they can pick the rate. They can pick the duration.
Yeah, term.
Yeah. And they can pick the fee.
Yep.
So you are really subject to what they decide when you're doing a recast. And that's where kind of the line from The Big Short, hey, I'm giving you the sundae. I'm giving you all the stuff that goes with the sundae, but the fudge and the cherry on top, that's mine. And I'm going to come and I'm going to gut you when you want to come and get paid.
Yeah.
That's exactly what they do is they can make that. So it's specific to your bank, but if that's the case, then you open yourself up for just a traditional refi and you can do that at another bank because they're not going to give you a better rate, right? Because a lot of times, or you have to do the math of the fee. That's where you start getting into all these auto calculations of, hey, they're charging me this, and this is how much more my payment's going to be, and XX, does this make sense? And it makes sense if we stay here 7 more years, but not if we stay here 8 more years. So the recasting of debt, it's something that's absolutely doable. Everyone can do it. However, the bank will get you with every way they can when you do it.
I've done, I don't know, over the last 20 years, probably 10 recasts. And again, as Matt's highlighting, the bank sets the rules. It's just really weird. Sometimes banks want to keep your business.
Yep.
And sometimes they're just as happy to let it go because they have to bring down their ratios. So I have no problem going to your current institution, but you should go in with strength, not weakness. You should go in with what you want. You should go into this situation, Frank, saying, I expect to have either a 25 or a 30-year term. Given that you only have 10 years left, that will undoubtedly drastically lower your payment, even if the rate goes up slightly, because you're going from 120 months left to 360 months left. If the bank says no, say thank you very much, then you just start a rate and term refi. And then you go to a mortgage broker like Convoy or whoever else, and you say, give me a quote. I think somewhere in the comments here, somebody had talked about a 5% on a fourplex with Convoy right now with some points. So
that's crazy.
Yeah, it's nuts, right?
That's nuts.
But again, I think it's a really valuable thing. So again, I think it was 10 or so recasts. I just did a recast on a property with another bank, Fremont Bank. And I talked about it on the channel. They reached out to me and said, hey, give me $50,000 and, we'll recast your loan. You'll save $800. They wanted my business. Sometimes the bank doesn't, and you'll know when they respond. So it sounds like you've got permission to do just a normal rate and term refi, in my opinion, Frank.
Yeah. And this is on our primary. And so you're saying they can change the rate because ours right now is at 2%.
That's why they want to so when you
that's why they're
going to stick it to you, Frank, because they don't want that 2-point debt.
Okay.
Yeah, they're losing money on that debt.
They're going to at least tell you got to go to 5, you got to go to 4. They don't want, all due respect, and I'm sure they love you as a person. They do not want.
Well, that mortgage is garbage to them. Yes.
Yeah. That mortgage is a loss on their balance sheet every month. It's a loss
every month.
Yeah. So your best bet is to keep your 2% mortgage.
Yeah. Again, yeah. Because no matter where you go, you're going to get something in the 5s today. But
maybe yeah.
if the goal is a lower payment, and I kind of felt that when you were talking about a recast, do the math. I mean, if you take the existing balance, which has to be small, and you stretch it out over 30 years, even at 5%, I'm going to guess the payment's lower. But let's also be clear. I think a 2% mortgage is free money, and I would not be in a hurry to do that. If I did anything, I'd go get an equity line for that just in case. Let's be clear. I would not touch that 2% mortgage. I'd go get an equity line. That's just what I would do. I mean,
yeah,
2%.
no, I appreciate it. Yeah, I really appreciate it. So the recast makes more sense if, look, because we do have 3 other properties that we purchased, investment properties at 6.6 or higher. So in the future,
yeah, if you got those down,
mm-hmm.
you know, if you got those to year 12 or year 13, first off, your chances of the bank doing the recast go up dramatically. They're trying to get you out of that 2%. They want no part of that loan.
So
you're also being dangerous. Sorry, 1 sec, Dion. So and I'm rude. Sorry. You're also dangerously close to being in that position where you have power with any bank and you're bringing them 4 pieces of debt, 4 collateralized assets. You're dangerously close to that next kick up where now you're not talking about the 4, we have financial freedom and you're crushing. Now you're talking about, okay, now I've really got this business thing down and I'm going to act like a business person to the bank and I'm going to give them assets that they can collateralize for shorter money, but I want value. Here's what I want, Mr. Banker. Good. Sorry, Dion. Thanks, pal.
Thank you, man.
So check with your lender, because everything I've experienced has been the opposite of these guys. These guys have done more. I've done 1 at the beginning of this year, just 1. And Wells Fargo said we're not allowed to change the rate. This is the mortgage. They had even sold the mortgage. All they were doing was the service providing, so they could recast the they were still the service provider thing, and it did change it to reset the 30-year. So I think it's very, like I think somebody said, it's very bank specific.
Correct.
Check with your lender what they do, and if they tell you, yeah, we'll keep your 2, and this is what we'll do. You know, don't commit to anything. If it changes things, you know, know where your barrier is, where you won't go past. I won't let my rate go up. I won't, whatever it is. Maybe it changes from year to year or something. I don't know, but my experience was totally different. They actually said they can't change the rate, and that was a direct quote from the bank. So maybe it's a different loan product or something on a recast.
Yeah, it could be an FHA or I don't know.
Well, they also said you can't recast an FHA.
Ah, there you go.
So it can be owner occupied. It just can be conventional. It just can't be a FHA. I don't know about VA because I don't have one, and I don't have a FHA. I just remember those 2 things because I knew questions would come up.
It's a lot the same rules as like insurance. One insurance agency is like, yeah, I love this stuff. We want 2, 3s, and 4s all day long. And State Farm just sent me a letter saying that they don't want 2, 3s, and 4s. I mean, they didn't say, hey, we don't want your business anymore. Yeah. They basically just gave me all the terms that says we don't want your business anymore. Yeah. We'll only love you if you lose 75 pounds and you shave your head. And I don't need love that bad. So
Thank you. One last thing. Do you think it's common for the recast to have prepayment
yes
penalties?
There'll be some fees. I don't.
Periods. Yeah. Okay.
Yeah, for sure.
Is it like 5, 4, 3, 2, 1, 3, 2, 1 prepayment? 5, 4, 3, 2, 1. So it's, if you do it within a year, they charge you 5%. If they do it within 2 years, it's 4. 3 is 3, 4 is 2, 5 is 1.
Yeah, this company didn't say yet. I was just wondering if it seems
it's
like
pretty
it would
common.
Be something that would come up.
Common.
Yeah.
Probably a 3-2-1 being the most common.
And since you're looking at selling your property, Frank, and moving to Washington, you might want to look at that aspect.
That's the heavy consideration. Yes. Thank you. Thanks all.
All right, bud. All right, Rick Tavius, look at that. Got his hand up. Rick Tavius, what do you got for us, bud?
Hello, guys. So I'm about to close on this property on the 29th, and it was for a really good steal. And my question to you guys is, should I wait about a year or 2, because it's going to have about $80,000 in equity once this deal closed? I mean, it was a really good steal. So would it make sense to do a 1031 exchange within a year or 2 to get a property that's better? Because I would say it's like a mid or low class, mid to low B class C class property, and go up to like a B or A. Would that make sense?
Oh, this is a good question. So we'll go to you first, Matt. When you look at buying properties at deep discounts, when do you think about recycling that equity, which is essentially what Rick Tavius is talking about?
Rick Tavius, is this your first one?
Yes, sir.
Yeah. So here, thank you. Appreciate that. So what I would want to do is I would want to get that thing stable first and probably close to optimized, which means you want to make sure that you've done all the safety concern stuff, that you've done all the health concern stuff, that you started to really update the unit a bit with money over the course of the next year. What you really don't want to do is you don't want to become a professional buyer where all you do is buy properties. Those guys turn into slumlords. So what you want to do is you want to become an investor, which says, this asset is going to be worth a lot more 20 years from now if I stabilized it and I optimized it. That way it was returning its highest cash flow. This is also the fastest way to get your bank to pay attention to you, because they will see, hey, this guy Octavius, he's like dialed in. He's not worried about doing the next deal in 30 days. He's worried about making sure the deal he's got that we're invested in him on, that he's got this property right. So I would, my first year in, I would look and learn the landlord space, see what you're doing, see what works, see what doesn't, see what repairs come up that you weren't expecting. And then as money comes in and as you start to build that stock over the first year, then you can make some of those other investments that will make it a better property. Then you see where the market is a year from now. A year from now, the market might be down 10%. It might be up 10%. Depending on what's happening in the market is dependent upon what I will do, because I want to see if I take the capital out of A and I put it into B, what's going to be my return. It's all about what that return is on my capital, or in Zub's case, what his yield is. So I think you're doing great. Congratulations on your first close. Congratulations on a big win. But I would be slow and steady, slow and smooth, smooth as fast. And I would be watching that over and experience it, enjoy the journey, but experience it over the next year, because you will have things that will F up your current plan today. I promise. I'm not wishing it on you. It's just going to happen. And so you just want to make sure that you're stabilized, because the most important thing about buying the property is keeping it.
Yeah. Dion, you want to chime in this? I know you haven't really done a 1031. You haven't moved equity. You're the lazy guy, but do you have any thoughts on this question from Octavius?
I absolutely do. We do this in my members only, like an actual exercise of this. And it's nice to meet you face to face, Ricky. Good to see you. First, how much is the total price of what's the value of the deal?
So I bought it for $85,000, but the total value of the deal is $150,000.
Okay, so it's 150. So in your mind, that means you see about $80,000 in equity. And really what you're looking at is, if you went to sell it, you're going to have a cost of selling. About 8% is going to go out to agent, title, those kind of expenses. If you were to do something like, and this is what people call using their equity, recycling the capital. The first question is, are you confident that you know of another deal that you can buy where you would put the money to work where it performs better? Right. And I don't mean, I think I could buy, I mean, you know of a deal, if you made an offer, you'd get it accepted. So could you use the money somewhere? That's the first question. The second question is, how do you touch the equity? The first thing is, do you sell for 1031? Or do you take out a home equity line of credit? Or do you do a cash out refinance? And how much of the equity can you go to? Can you usually go up to like 75, 80% of the equity? So if it's 150, you can usually borrow 130 or so. So you can have a new mortgage at that amount. And so it goes, can I deploy the funds successfully with confidence? How would I touch the funds? And then the last question I always go with before I sell a property or think about selling a property or work with somebody who's selling a property, this is worth 150. You're buying it for 85, you said, right? Okay. If the house next door on the other side of the street was identical, exact same layout, same neighborhood, like same year built, everything was the same, and somebody said, I'll sell you this one for 85,000. They're both worth 150, but you could buy this one for 85. Do you think if you had the ability, you would buy it?
Yeah.
So if you would buy a house exactly like that, why would you ever sell it? Like, you're in the position, I would go grab that because that's an amazing deal, but I'm going to sell it. So could you deploy the funds? How would you touch the equity? And then if you would buy it, why would you sell it? That's kind of the logic train I always want to go through when I'm looking at a property. And because of that, I've never sold a property, and I've not done a 1031. I've not done a cash out refinance. I've not taken out a HELOC. It kind of sucks. Those first few years, you're like, okay, I figured this out. I got a property. Let me get the next one. No, it was a couple of years to get my first one, and then a couple of years to get my next one, and then a year and a half. And it started slow, but that's where stability comes from. That's where the lenders trusting you comes from. That's where getting all your systems in place to make you want to make this easier, so you want to grow.
Yeah. I kind of have the opinion kind of blended between the two, Dion and Matt. And the first thing I would think about, given it's your first deal, I guess it's Ricky. Ricky.
Yeah, you can call me Ricky. It's easier.
I appreciate that. What I would do is what Matt said. I'd be a landlord for at least 6 months.
Yeah.
Mm-hmm.
Because you have confidence that this is 150 bought for 85. But now let's get into operations. Right? Let's be a landlord. Let's do that. And the other thing that does is that starts to produce income, rent. Because one of the things you have to do for a 1031 exchange is establish like for like. So sell a rental, buy a rental. I had a question the other day. Hey, I bought a deal, but now I want to sell it, and I want a 1031, but you don't have any evidence of rent collection. My suspicion is the IRS is not going to like that, right? Because it's not a like kind for like kind. I don't know if intent is enough for the IRS in this case. So I'd put a feather in my cap. I would run it. After 90 days, 6 months, it's in operations. I might go tap an equity line for just in case money, right? Just in case I find that next great deal across the street so I can strike. And then at the end of the year, I think you step back and you go, hey, did it work out as expected? Can I find a better deal than this? How could I reuse that capital? And then we have this conversation. But right now, celebrate where you are. You found a home run, it appears. Enjoy that. Now, let's do 6 months of operations. That's where my brain goes.
I appreciate that.
Yeah.
Yeah, nice win.
Cool. Nice win. Yeah, exactly.
Better than my first.
It's not closed yet. It's not closed yet. It's not closed yet.
It's getting real close. It actually it got really good cash flow, and it brings in 800 a month, and on top of that, the rents in the area for that property should be between 12 to 1300 a month. So
is it occupied?
Yeah, it's occupied.
So you're gonna have to go in and do the binder strategy.
Mm-hmm.
Nice.
Yeah,
love it.
Yeah. So because we don't have a lot of time, so let's just break down this deal a little bit more. So you're picking it up for 85 is the purchase price. How are you getting just a traditional loan, or how are we buying this thing?
I'm buying this investment loan, so I'd put 25% down.
Okay, so you're coming in with, I don't know, 22 grand, something like that?
Yeah.
Okay.
I estimate between 5,000 to 6,000 and some repair costs to get it nice and pretty. Is mostly cosmetic.
All right. So in my world, we'll just round that to 30,000 bucks, right? Down payment, closing cost, make ready. So let's say you've done the binder strategy. I just want to do a calculation. So you've done the binder strategy successfully, and the tenant agrees to 1,200. What do you think your monthly expenses are? What's your mortgage payment going to be? Taxes, insurance, reserves? Are you going to self-manage? Not? What do you think the all-in monthly expenses are going to be?
So my calculation for monthly expenses is going to be between like $728 a month.
I love it. You're precise. 728. Okay. So let's call it 750 between friends. So 1,200 minus 750 equals 450. 450 times 12 equals 5,400. 5,400 divided by 30,000 bucks is 18% yield, Ricky. I would call that a home run grand slam. 18% on your money. Should all this work out?
Yep. Hey, Ricky.
I would say it's a real blessing. My wife works for a broker, and he's also a real estate agent. He has like 100 properties, and he's like, "Hey, Ricky, I got a really good deal for you. I know you want to invest.
Get this one."
Yeah, he said, if you don't buy it, I'm buying it. So
that's always a good sign when another investor says that. That's pretty cool. Well, folks, we're just about out of time. I want to let Matt and Dion say some closing thoughts. Dion, closing thoughts. Wrap us up where they can find you.
So, Ricky, I want to make an offer. Recently with Michelle, I did a video where we made a binder for her rental.
Nice.
For this school community, if you'd like, I'd like to do a video with you where you and me make a binder for your rental.
Oh, nice.
And then go through the timeline on when you should use it, because you don't want to close and then go do this. You want to wait a couple months.
Yeah.
But I'll help you get it together so you know exactly what data to use from the area that your rental's in.
Man, we have good people in this community.
That's awesome. Thank you.
That is pretty nice. All right, and Deanne, where they find you?
I'm sorry, go ahead.
Deanne, where they find you?
Right here on YouTube, because I think this video is coming out on YouTube.
It is.
Dion Talk Financial Freedom.
And he is in the school community. I tag him all the time. So there you go. And Matt, closing thoughts where they can find you?
Ricky, do you have a construction background?
No.
Okay.
I work at Home Depot though, so.
All right. So here's what I'll do. So Dan will spend that hour with you doing a binder. I'll spend an hour with you. You video tour it or take pictures for me, and I'll show you what stuff you should upgrade that gets you your biggest bang for the buck for rentals.
Gosh, we got good people in this community. Yeah.
So you'll send me some pictures. We'll connect. We'll set an hour aside where I'll say, okay, do this, this, and this. I can tell you which products you should be buying from work. I know you get a 10% or a 20% discount.
They stopped doing discounts. People were like giving discounts to friends and stuff.
I bet they were. Yeah. Not that I benefited from that at all.
No, not at all.
I'll help you. I'll spend an hour with you. Make sure that you're up tuning the right things and buying the right products so that will last.
Yeah.
And
Ricky, if you could do a video walkthrough, I think that would be super cool.
Yeah, do a video. And my only requirement is you got to post it into the school community.
Yeah.
Oh, 100%. I'm actually doing a TikTok series on it. So I already posted my first video explaining my goals. And as soon as I close, I'm going to go through the property, walk it through, show what I actually want to do. So that it's for myself to show my progression and also to help those who are interested. And if they have questions, I can send them to school as well.
Oh, we have such amazing people in this school community. Guys, keep doing the work. Ricky, 18% yield is awesome. Congratulations. Deals are out there. Buyer's market, as Matt highlighted earlier. Disrespectful offers left, right, and center. Buyer's markets do not last long. Take care, everyone. I got to roll. Later.
Bye, guys.